Hey guys, it's Vehonna, and today we are talking mortgages. I have my good friend Lori Distelcamp from Informed Mortgage. Lori is a mortgage consultant, and we are going to ask a lot of questions and gain some insight into mortgages. Thanks for joining me today.
Of course, I'm excited.
Appreciate your time. So before we dive in, Lori, tell us a bit about your background and how did you get into this area of the real estate business?
Okay, so I've been in the business for 21 years, so I've been doing this a long time. When I started out, I had been in the import-export business, and I took a little break when my kids were young. And my uncle Ed, who was a mortgage loan officer for many years and very good at it, he kept telling me, I think you'd be great at this. You should try it. So I said, okay, I'll try it. So I worked as his junior for a few years, and then, just really took to it. And I went from working at a big bank to a retail lender. And now I work at Informed Mortgage, and we are both a direct lender and a broker. So the great thing about Informed, first of all, just like the name says, my goal really is to educate the client. I'm not trying to sell something. I'm trying to educate the client, educate my referral partners to make sure that the deal goes smoothly. And secondly, I have the ability to shop around to different investors. Okay. I have many different loan programs to choose from, and I can also shop around for the best interest rate. So for me, being at Informed allows me to help more people, having more choices for the clients.
So you have more options. So June is home ownership month. So this month, I and you are going to inform our viewers and our listeners about the benefits of home ownership, and the big topic that of course comes up is mortgages, because most people need a mortgage to get a home. And that could be because they need a mortgage to totally finance the home, or even finance just a portion of the home, which I think sometimes people don't realize is an option. So as a realtor, I do get clients that call me and they say, hey, I really want to buy a home. And so my first question always is, have you been pre-approved? Now, when I refer a client over to you, what then happens? How does that conversation go once I hand them over to you about a pre-approval for a mortgage?
Yes, good question. So whenever I'm talking to a client for the first time, it's important that I get to know their goals. Are they renting now? Do they live rent free? Do they have a budget? That's very important. How much are they willing to spend per month in a mortgage payment, including tax and insurance? Because, we really want to make sure that we work backwards from that to figure out what their budget is for the house price, so that we can go back to you and say, here is the price range we need to be looking in. What we don't want to do is have somebody out looking at houses before they've really talked about their budget, because if they fall in love with a house that is really out of their range, that's a waste of their time and also a waste of your time as well. So we start with, what are your goals and what is your budget? And then from there, we talk about income, assets, and credit. Those are the ingredients really of getting a mortgage. So we want to talk about those things extensively so that I can get an idea of, where they are. And then also importantly is I want to get paperwork up front. I want to get their income documents up front, their asset documents. This way we can troubleshoot any issues. And also I want to sort of pre-underwrite the file. So, getting the paperwork up front allows me to really take a deep dive into the situation. And, when I tell you they're pre-approved, they're solid.
Okay. And so that pre-underwriting makes the actual approval of the mortgage even more solid.
Correct. And this is really important, especially now, because it's a very competitive market.
That it is.
A lot of times when your client's putting an offer in, it might not be the only offer. Oftentimes it's not, right? There's several other offers. So if the pre-approval letter says it's been fully vetted, income, assets, credit have been reviewed, the seller is going to be more apt to pick that offer versus what we would call a pre-qual, where, hey, yeah, they've had their credit run maybe. The loan officer maybe just talked to the person, but they really didn't go that extra mile to get the documents and upfront underwrite it.
Yeah. That's really good information. So there is a big difference between a pre-qualification and a pre-approval.
Yeah, a huge difference. But important to note that a pre-approval, it's free. It should be free. Okay, it's not going to cost the client any money. It's just going to cost them a little bit of time and a little bit of upfront homework in getting the documents. But these are things that ultimately, at the end of the day, the underwriter is going to look at them. So do we want the underwriter to look at the documents after we're under contract? The client's paid for an inspection, paid for an appraisal, put their earnest money down. Now, finally, the underwriter takes a look at it and there's an issue, right? So what we want to do is we want to have the underwriter look at these things before they go under contract. This way, number one, we know they're going to close. And number two, if an issue does pop up, the loan officer can work with the client to fix it before they go under contract. So there's no surprises.
Awesome. Yeah. And so as a realtor that is going to refer a client to you to go through a pre-approval process, is there anything that I or we out in the world as realtors should have as far as information to pass along to you before we actually send a client your way?
Yeah, so just supporting that upfront process in letting your client know, look, you're going to be asked to provide pay stubs. If you're self-employed, you're going to be asked to provide your tax returns. And the more documents that you're able to provide up front, the more solid your pre-approval is going to be. The other aspect of it is there's so many loan programs out there, right? And each loan program is a little bit different in the guidelines. Some of them have income limits. If you're a first-time home buyer and looking for a grant program, there's income limits on some. Credit score minimums, debt to income limits. So if we have all the documents and all the information, we can accurately tell the client, okay, here are the different loan programs you qualify for. And someone could qualify for more than one program, right? But then which one is going to give them the best payment, or which one is going to allow them to purchase the most home for their money. So it's very important that we look at all that up front. But there's other, nuances. One of them being, be honest with the loan officer. Be honest with them. If you have $20,000 cash and it's under the mattress, you have to be honest, because there's things that we can do to help you get around that, from, getting the money in the bank, sooner rather than later, to possibly getting a gift so we can bypass the large deposit, things like that. Loan programs, just about all of them will allow gift funds towards down payment and closing costs. Depending on the type of loan, sometimes it needs to be a relative. Some loan programs, it doesn't need to be a relative. So if gift funds are available, the other aspect of it is, I want to know up front so I can tell the client the easiest way or the best way to have that gift deposited. You can actually have the gift funds deposited directly to the title company to bypass us having to look at the gift donor's assets and bank statements. So sometimes, grandma and grandpa, they don't want to show their bank statements. This happens, right? So if we can maybe have the gift sent directly to the title company, I don't need to see grandma's bank statement, which is great. So, me knowing up front that gift funds are involved, I can prep the clients better.
Oh, that's good to know.
Yeah.
So with rising prices and the economy the way it currently is, and with interest rates being much higher than what people would like as we've come out of COVID, what are some common income pitfalls that you see?
Okay, that's a good question. So a couple of things. some people have multiple jobs now, to hustle, to make money. So if someone has multiple jobs, we can't always use the income from all the jobs, depending on the type of loan it is and how long they've been on the job. So, for example, on an FHA loan, you have to have been on 2 jobs concurrently for at least 2 years to use both jobs' income. So conventional, in some cases, you can do 1 year. So somebody may think, hey, I have multiple jobs, I should be able to qualify. But if they haven't been on both jobs long enough, we might not be able to use both income sources. The other pitfall that we have is, for example, if somebody has overtime. So, some jobs, the borrower will have a ton of overtime. But what we're looking for, what the underwriter's looking for is, do they have a history of overtime? And is it expected to continue? So if someone's overtime just started this year, we may not be able to use it. Or if their overtime, if they have a history of overtime, but it's not going to continue, we might not be able to use it. So everyone's case is different. So I would really recommend, talking to the loan officer up front, because everybody's income is a little bit different. Unless somebody is cookie cutter, hey, I'm salary W-2, I don't get bonus, I don't get overtime. Everybody's income's a little bit different, and we do need to take a look at it and calculate it the way the underwriter would calculate it.
Okay. So every case is literally case by case basis.
Yes. And I can't stress that enough. Like, a big takeaway on mortgages would be everyone's case is a little different. And if someone is saying, hey, well, my buddy got this type of loan and this rate, and he put this much down, well, everyone's a little bit different, and you may or may not qualify for the same thing.
Right. Yeah. Okay. So at what point during the home buying process is it best for a mortgage officer to get involved?
I think the sooner the better.
Okay.
We really want to know up front, before you start looking at houses, ideally, we want to know your budget, what you qualify for, what type of loan program it's going to be. And that's really, it's going to benefit the client to be empowered with this information. And they'll be comfortable with exactly how much money they're going to need, what the payment range is going to be. So it's going to be very helpful for them, and it's also helpful for you because it's going to save you time, right? Time is one of our most valuable resources. So you want to make sure before you go out there and start showing a bunch of homes to people that, yes, they're all ready to go.
Right.
Yeah.
Okay.
Very important.
And so one thing that I think is very important during the process is just the communication between the realtor, the mortgage officer, and the client. I have run into situations where some clients have been somewhat hesitant to have that communication. And with one of my clients, I found out it's because they thought that all information that's given to you was being shared with me. And so we had a meeting with myself, their mortgage officer, and the client just to talk through all of your income information and the paperwork that you have to give to your mortgage officer. That stays with your mortgage officer. The information that's given to me is only what I need to know to continue to help you through the process. And that's related to how much home you can afford, and how much of a payment you can afford with your insurance and taxes. That's what I need as I'm helping you shop for a home. So can you talk about that and your thoughts on the importance of that communication?
Yeah, absolutely. So you're right. Confidential information is never going to be disclosed. So when I'm talking to a client, they're either qualified, in which case I'm going to communicate to you, this is what they qualify for, this program, this price range, right? We're not going to dig into specifics of income. If someone's not qualified, I always say not qualified yet. Okay. What are we working on? We're working on, improving credit, or we're working on, saving more money. I'm not going to disclose the specifics of somebody's credit score to you or the specifics of their assets, but I am going to communicate this is what we're working on to become qualified.
Yes. And another thing that I've educated some of my clients about is there are times that a question may come up from a client related to their mortgage. And I always tell my clients, you have to reach out to your mortgage officer for the answer to that question. I try to make sure I stay in my lane as a realtor, and I know that mortgage officers do the same as well. But we're in two different lanes. The two lanes are going parallel side by side, but there are times that I just can't answer a question for my client because I'm not a mortgage officer. Do you run into that as well?
Yeah, I've also run into clients that they don't mind their realtor being on the phone with them when they talk about certain things because they just have that comfort level. And that's somebody's choice, if they want to do that,
Yeah.
We always want to make the clients feel comfortable and know that we're working in their best interest.
Yes.
Yeah.
So let's pivot a little bit. We did talk about pre-approvals and the buying process. For someone that wants to sell their home and someone that, say, wants to know how much equity they have in their home before they sell it, what does that process look like?
Yeah, so that's really important. I'm glad you brought this up because sometimes people who they're not first-time home buyers, they already own a home. Sometimes they think that they really don't need the guidance, but I think it's just as important because you don't want to put your house up for sale and start the process of buying another house without knowing some key details such as how much am I going to net on the sale of my house, right? Very important. What can I qualify for on the purchase end? So we want to make sure that that's something we discuss in depth with the borrowers. Very important for someone. And do I need a home sale contingency or do I not need a home sale contingency? Those are big topics that come up with someone who is selling a house.
So the elephant in the room for this area, as we're in the Jersey Shore, is flood insurance. And does someone actually need it? And how much additional does it cost? And how does one find out if they actually need flood insurance?
Yeah, that's a good question. And yes, it is very relevant. It's easy for me as a loan officer to look up a property and see if it's in a flood zone. Okay. If it's in a flood zone, you will need flood insurance. Now that's not to say if it's not in a flood zone, you can opt to get flood insurance, but if it's in a flood zone, you are going to need flood insurance, and the cost of it is really going to vary depending on the elevation and the area. So at that point, I would say, we discussed before staying in our lane. At that point, now it's time to consult an insurance agent to get some information on how much it's going to cost. Because yes, that can add a couple $100 or more to the payment and affect the affordability for the client. Another thing that's been coming up a lot is the age of the roof. The age of the roof and the cost of insurance. And actually something that just came up recently was an old roof with solar panels on top. And it's a little sticky when you have an old roof with solar panels on top. So, and again, every case is different, but main thing is the client really needs to talk to the insurance agent up front so that they know what they're getting into in terms of insurance.
Solar is very tricky.
It can be tricky.
A lot of homes down in this area have solar panels, and it's really important. And when I have clients that want to sell a home or clients that want to purchase a home that have panels, it's really important that the homeowner have their solar agreement and know which solar company they have that agreement with, because it's imperative that we get in touch with the solar company, because there is a transfer of those panels that has to happen. And it can be very daunting trying to get in touch with some of these companies or researching to figure out exactly who someone signed a contract with.
That is true. And the other aspect of it from the mortgage perspective is a solar lease payment is going to add to the client's debt to income ratio. So it's something that could affect even whether they qualify for the house. So if you know that there's solar, that's something that you can do to help your loan officer is
Okay.
communicate that as soon as possible. Hey, the solar payment is $80 a month or whatever the payment is.
Yes.
That's very helpful to the
Okay.
loan officer.
Lori, thank you so much for
Thank you for
joining me
having me.
today. Absolutely.
This was fun.
Yes, it was fun. So we'll definitely do this again.
Yes, for sure.
Thank you. And so if there are any questions that you guys have that we haven't answered, drop it in the comments. We'll monitor and we'll make sure that we give answers. If you have any cool ideas for Laura and I to do another episode, put those below as well, and we'll film another episode together.
Sounds good.
Yes. And so what's the best way for people to get in touch with you?
Old school, text me, email me. Any question, I'm here to help educate.
Awesome. And we will drop Lori's contact info below. And so thanks for spending a little time with us.